Hello, Jaime. How you doing? All right, we're ready to go. Okay. Hello, everybody, and welcome to this Nailing FX session. Uh, Thanks to FX Street, Predictive, and Skydesk. And before we begin, let me read the disclaimer. The following video clips demonstrations are for educational and instructional purpose only. Predictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the videos is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetically results obtained through the demonstration do not indicate in any way the results you may receive on using our products. All right. Before we begin, let me show you something. If your first time here watching this recording, if you want to see my previous recording, you have to do is go to the fxstreet.com website, and in the video session, you might start here in latest live video, and in this search bar here, all you have to do is type my name, okay? And you will find all my previous recording. Here there are 2 pages. And I think you will find the last one and the all ones I have made live trading sessions here in FX Street. Okay. So remember that you can always look all my previous sessions, and if you have any missing lesson that I did in the past, you can check it here and get up to date. Okay. Right. And let me show you something here. Remember that this session is sponsored by Predictive and Skydesk. I will show you later a little bit about that. And remember, if you are watching this recording, here is my email address. It's pedro@predictive.com. Take note of that email so you can ask me any questions you're watching the recording or live. Anyway, you can always send me an email. I will be happy to reply you. And for my page in tradingwithufos.com, tradewithufo.com/Pedro. There you can get the tools I will be using, some of the tools I will be using today on the TradingView website. Okay, I will show you later. Right, let's begin. Let me show you some chart today. Let's see I was looking at the euro early today. I actually took some trades today. Very nice on the euro. And if you're familiar with what I do, remember that I always trade based on the order flow and on the volume. Okay. And let's do a quick analysis today for the euro, so you can get a fresh I don't know, info about how I do it and some ideas on how to trade using the order flow. All right, I know some of you are already using the order flow software. If you want to have access to the software, you just send me an email and I will send you a link where you can try this software and the data feed that I'm getting here to actually have access to all this market depth you can see on the right side of the screen. This bars. This is the depth markets. They're pending orders that are out there in the market. Something you cannot see in many platforms. All right. If you are trading forex, let's say let's bring the NT4 so you can see the difference. This is the Skydesk website. This is very good if you are using any EA, any algorithm trader. You can here just run a BPS, right, with NT4, NT5 already loaded, and just upload your EA. In this case, I'm just going to use it to have access to an NT5, in this case, to show you the euro chart. Okay, right, this is the euro. So this is the what most people see when they have an NT5 or NT4 application. They have pretty much the bars and a bunch of indicators. Somewhere here, indicators here, all these indicators. But as you know, all these indicators are very lagging indicators. So the information you get from them is very useless, all right? And when it comes to volume, all you get is the broker's volume. You won't get any information about the whole market volume. Okay, just the brokers where you're trading with volume. That's all you will get here. Let me compare to you very quickly so you can understand what I'm saying here. This is the Trading View app. As you can see here in Trading View, we have the Euro 2, but this is not the Forex or the spot Euro. This is the futures, Euro futures. I'll show you very quick here what I want you to see this. Is because if you compare this chart to this chart, let me try to put it smaller. Okay. This is the 1 hour. Let me switch it to 5 minutes. All right. So let's compare now these two charts. You will see how they look pretty much the same, right? Take this off. I can see how they look pretty much the same, same structure, but there's a difference, and it's in the price. Okay, because this is a spot of forex for euro, and this is the euro future. But as you can see, the structure is pretty much the same, right? So this will give us an advantage if we trade against the spot forex trade, because we show you all the information you can get from the futures market that is not available on the spot forex market, right? So let me take this off. We get back here later on the trading view. Let me get this off as well. All right, so here in the order flow, this is the euro, okay, the same euro, but I'm using tick chart. I can use a 5-minute chart as well. You can see it will be the same structure as we saw on the trading view app and in the NT5, right? The same structure, but we have a lot of information. We have all the orders that are pending in the market, so we can see where traders are positioning in the market, right? With orders ready to be filled, waiting to be filled. We can see the volume, right? This is the big WAP, the volume average. You can see here on the left side, the volume, actual volume for the session, point of control, value area high, value area low. I can explain a little bit about this in a few if you like. If it's your first time here, no problem to explain that. And also I can see these green and red lines. These are imbalances of the market. An imbalance is a huge difference between the buyers and sellers being aggressive. So we can see, for example, if we see a green line here, right? This can be programmed on the platform. So you can see that buyers try to push the market up here. They thought this was the bottom of the price, and then the price dropped, and they are now trapping here. Okay, that's basically what this means. The same way when you see the red lines, the sellers entered with very aggressiveness, and they push the market down. Okay, and there are a lot of other things we can see here, like what's being traded in real time, the delta, the difference between buyers and sellers. Here you can see it's green, and it's 2,800 right now. which means that's the difference between buyers and sellers that are already executed in the market. And here, in this one, you can see the difference or the total of pending orders on the selling side and total pending orders on the buying side. So you can see the whole market at a glance. Okay, we can see everything. Something we cannot see if we're just using an NT4, NT5 chart, no matter how many indicators you have there. That's impossible to be able to see what we can see here in this market with this data, okay, with this information. So let me just do a quick analysis here on the euro. You have any question, please just use the chat. Okay, you can ask anything you want on the chat. We're happy to answer. Remember, if you are not watching this live, you're watching this recording, here's my email, and you can just send me an email at pedro@tradeactive.com, and I will get back to you. Okay. All right. So let's. The first things I do every day is to look at the point of control, because point of control is where the most trading activity happens during the session. Okay, so I can see where the traders agree to have the more entries. Okay, so that's important because it's a price area that I can look for opportunities. Okay, I can see depending on how the market is behaving during the day. Um, Something I like to do is to check what happened the previous day. So if I go here, I can switch the volume for previous day, last day, and I can go for the yesterday session, which ended here. So I just need to find where it begins. Right here, this line, okay? So I can see what happened yesterday, and I can see the actual volume here on the left. Remember that volume is useful if you're using like this horizontal. If you're using a vertical volume, it's pretty much useless because we only tell you that there was volume on that candle, but horizontal volume tell you how much volume was actually traded on a given price. Remember that you must look at price instead of just candles. Okay. We use candles because it's easier to see, easy to identify. It's more, we are more familiar with candles, so that's why I use candles to show you um, the what's happening, okay, during the day. But I don't even use candles sometimes. It's not pretty much necessary with all the information we have. Okay, so let's say this is yesterday, okay, and this is the value area low of yesterday, meaning that the point of control is higher. You can see it here. Let's see what happened yesterday. It was a huge draw here on the downside, then went up. Again, you can see this white line is the big WAP, which is the volume average. Okay, so it's interesting to see when price meet this line and see what's the reaction on this area. You can see that the price around this line is always tend to rotate, to go up and down, and then it breaks on the upside or the downside. Okay, it always happens like that. You can see here again how it rotates here. So it's an important area to look at. If you're looking at yesterday's session, it's better if you see the last time that the big web was traded, okay, that it was rotate around it. So we can have or mark that area of rotation with a rectangle and see if have any effects on today's session. And we can see there's nothing here. I think today start here, and there's nothing happening on that area. Okay, but it can be of important later. Okay, maybe when the price uh, get back into this area, you will see how it will react. Maybe it will be rejected on the upside again. Okay, that's very one of the highest possibility that might happen when prices reaches back to the big WAP where there were rotation. Okay, that's important because there's volume here, and volume is like I don't know, it's like a dense area where the price tend to stay a little longer, accumulate, and they break on the upside or the downside. You don't know where you're going to go, but it tends to rotate in that area. So it's harder for the price to just go through this. Okay, you can use volumes area for protection for your stop losses, for your entries, and because of that, because price won't move fast through it. We take time. Maybe it won't even break it. Okay, that's why volume is very important when trading. And the most important thing is to look for rotation because there's volume accumulation when you see rotation, like this, for example. You can see here, just as an example, you can see when price always reach this rotation area, you can see how it tends to get difficulty to go through. You can see how it reached just the area, but didn't go through this. Then went up, and then went through it, but then again, it start to trade outside this accumulation area here. So this happen all the time with volume. Okay, and this you can see this is the point of control yesterday, and it's even more important volume area than any other when you see rotation. Okay, sometimes you won't even see any rotation at all, and it's harder to spot this important volume area. Let's just let me show you something. Let me put a horizontal line here on both sides of this rotation we found yesterday. And you can see how on today's session, you can see it went on the downside, then it tried to break, but it didn't happen. Then again, it tried here and then finally go through. Little rotation on the upside. And you can see how the big WAP is in line very close to the price here. And then it just went on the upside. You can see here how it tries to break on the downside. Okay, so you have your protection here below this big rotation and volume area. On the next day, you will see how it's getting very hard to break, and see how price just traded on the upside. And then here again, when it reaches here, you see how it find it difficult to break, but then it did. Okay, and you can see why this is broken if we have a lot of volume, and it's because the fill orders, okay, that were here at that time, they got actually taken by some trader. Okay, somebody took these pending orders that were here on this area. That's why it went down, but you can see it didn't have enough strength to continue on the downside, and then it's recovering back on the top. You can see this area here is a big buyer took this trade here and pushed the price up. Okay, and everything seems to be in line with this volume area of yesterday. Okay, not even today. We're talking about yesterday's volume. So you can see how important volume is and how it affects the 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 market even and the next day. Okay, let me switch now back to current day so we can see where it's being traded and what's going on today. I see a question. I didn't understand yet the importance of POC. How can we follow you more? I want you your live trading session. Thanks. All right, Jaime. The point of control, the importance of point of control is that is where most traders agreed that it was the best price to enter. Okay, so everybody's is so for some reason is looking at that price. And most of the traders or the trades took place at that price. Okay, that's the important of point of control. And for example, we can see here the point of control you can see is 2001 contract at that price level. Okay, there was the trades that happened at this price, 2001 lots. Okay, and the rest is less than this. So this is the point of control because it has the most volume. So everybody agrees, most of the traders agreed that that was the best price to get into the market, right? That's important. And from this point, we have value area low and value area high. And this is just a calculation based on the point of control value, which is 2001, and the rest between here, value area high and value area low is 85% of the trades. Okay, outside this area is just 5% of the rest of the day, uh, the trades of the day. Okay, so what happened when prices go outside these value areas? They move very fast because they have probably no resistance at all. Okay, that's the importance of volume here. That's why I use it. So if we can see for today's session, point of control was here on this area, okay, on this price level. You can see how they rotate around the point of control, because you can see around the point of control here on the left, there's thousands of contracts being traded here, thousands of lots, just in this small area. We can put like a rectangle here. You can see in this area, all right? Just by looking at the numbers here, all right? Now by looking at the candles, but if you put a rectangle around this volume here, you can see that most of the trades were made here, okay, in this area. You can use this as an entry point or protection area, right? Depending on the trade you are taking. That's why it's very important to see the point of control. I don't know if you have it clear now, Jaime. Let me know. And to follow me, well, I will update you guys on the email where you can see me trading live. I think we're gonna do some sessions on YouTube next week, and the YouTube channel is on the. Let me show you. YouTube channel you can follow here is Trade with UFOs. Okay, in that channel you can find me. I think next week I'm gonna do some live session there. Okay, and here is the website tradewithufos.com, Nailing FX. You can find the schedule there. I think you're gonna put the schedule there, so you can see where I'm gonna be trading live. I know you, Jaime, liked my live trading sessions. Are very nice and fun. Well, we can see now how the price is actually entering this volume area. Okay, you can see how he tried before here, and then the price just dropped down. So it's a very nice way to find opportunities inside these areas, because we can see how the price gets rejected from that point. What I do to find the most opportunities that I like the most is when I see these kind of breakdowns on the area, okay, on the area itself. For example, this last red candle here that actually make the price drop on the downside. What I like to see, let me just put the rectangle a little bit smaller so you can see. So this area here, you can see that the price actually went outside the volume area. You can see right now live how the price been dropped, okay, from this area here, and you can see it's in line with the VWAP, which is what's the volume average right now, right? This is the volume average. So this will be like the kind of a point of control, but average, okay, right now. So you can see how prices actually is being rejected from this area. So trades, when you go to the right direction, of course, you need to find out which one is the right direction to go. And you will find very, very nice opportunities around this volumes area. It doesn't have necessarily to be in the point of control. It can be anywhere, can be down here, can be here as well. When you see rotation mostly, you can find very good opportunity. Just to put you an example, right here you can see a rotation here, and we can see how the trades, there are big trades inside this area. And you can see next what happened when the price reaches back this area here. You can see how in this right here it was rejected to the downside. So there's a lot of ticks here to make some money. Okay, so a very very nice opportunity just by looking at rotation and looking at volume. Okay, and you can also look at exactly where to enter in these areas by looking at the footprint charts. For example, if I was trying to get into this trade right now here, I will look into this candle to see where is the volume here, right in this candle, where in the price, right? What would be the best area to enter? So let me show you a little bit. Just gonna select this candle in yellow so you can see inside. Let me go for clusters. Okay, let's find the yellow candle. Okay, here it is. As you can see, I cannot see whatever is on the right side. So let's say that we're here. We saw how this candle break outside our volume area that we have here before, and we decided to find a sweet spot here to put an order. Okay, so the first thing I do is, of course, look at the footprint, which is these are the trades that happens inside this candle. You can see that on the left side are the sellers, on the right side are the buyers. If I have program, you see in red here, if you're using this software, I can show you the templates. I think I sent Jaime the templates before, and I can send you any of you guys the template. Just send me an email, okay? All right. So what I'm looking here is the sweet spot where I will place my trade. I know this candle was a powerful candle that breaks on the downside, and we can see another sign here in the next candle. This green number, but didn't actually move the market up, and then we have this 100 cells that was a lot of difference between the buyers and make the market just drop, right? So this is a good area. So in these candles, I will look for this. The sweet spot will be the area where less trade happens, all right? And I can see right here on this 3x3, okay, will be one of the best spot I will select. Let me just put a horizontal rate here. Okay, and let's see what happened when every time the price tried to reach here. What is the reaction? Right, the price was trading below, and then you can see here when it reaches here right now, right, it start to pick up some big buyers, and on the top of that, sellers pushing the price down. You can see how the price is being pushed on the downside. Okay, and that will be a good trade. All right, just by looking at the volume. All right, we're looking at the volume of this particular break candle, and we can have some confirmation that this is a valid breakout on the downside because we can see the trades. You can see big trades on the selling side. And so we select the sweet spot that I call the sweet spot on this breakout candle, and just go and put my entry around this area. My stop loss, as I told you before, will be behind the big volume that we have here. Okay, and the target, if you want to go for secure trade, like fast and more secure trade, I will put my exit nearby the big watt deviation, okay, around here. And because price tend to go here, but I can see the pending orders on the buy side. So you can see here, there was a big pending order. So my exit will be around here, will have been here around this area, okay? Not any lower, because I have this that will act as a resistance for the price to go further down. So I will have entered here when price reaches my sweet spot. Okay, then price move down, and I will be looking at the resistance here, and my exit will have been around this area. Okay, so I will be already out of the market from my enter around here. And you can see now how price is just moving through that area, and then it's having difficulties to just pass through. And you can see this liquidity here will act sometimes as a resistance for the price. But actually, big traders need liquidity to go through to put their money on the market. So they will actually look for big liquidity like that. You can see now how the price again is being rejected on the downside. And my final target will be here, all right, around here, but always looking at the liquidity. So I will get out here on this area on the 135 contracts, a little bit higher, maybe 2 ticks from that point, just to make sure I get out safely. Okay. All right. So I mean, it was a very good example, live example, as how markets behave around these areas and how you can take advantage of that. And let me get the trading view up. Let me show you something that you can use too. All right, on the trading view, you can see we were talking about this. What happened here is you can see the red candle that break on the downside. And here we're not using the order flow software. We're only using the UFO indicator, which means unfilled order. And you can see how the UFO are this red line here, and this red line right here. And these circles here is the actual UFO. So what this app tell us is where to sell, okay? But you just won't sell because there's a red line here. You actually need to verify with volume that there's actual volume here to support this entry. Okay, you just don't put your money just because an indicator tell you that there's something there. Okay, you need to verify. You need um, to make sure that there's something that supports your theory, right? And in this case, we have the UFO pretty much at the nearby the area where we were trading on the order flow software. So this is actually confirming us that this UFO is correct. So if you're using Trade with UFO software, you can be reliable on that. Remember, always using something else to corroborate what you're looking at, like volume. Okay, remember the point of control will be around this area here, and the UFO was right on point, right? So if you enter here or nearby this area, you know that the trade was fine because it's now been rejected on the downside. Other thing the UFO has is telling us, oh, sorry. Okay. I just messed up the chart. Let me go back to it. Back to trading view. Okay, here it is. Okay, something else that the the UFO tell us is on the green UFO, which is the buy UFO, is suggesting us to we can get out nearby this area. Okay, like the price will find resistance around here, and let's see if this price is actually have any meaning on the order flow software. Is 126.75. Take a look at that on the chart. Be around here. Let's switch to candles. 26.75 is here. Let me just delete this one. Okay, so here is where the green UFO is telling us to that the price might reach this area. Okay, and let's see what we have on the left, where we have previous session low right here. But you can see here, there's 122 contracts before this area. So I will put, if I will trade on the long term, I will put my exit a little bit higher than these 122 contracts pending here, because that actually will be the resistance. So we can see and say that the green UFO is pretty good. It's actually pretty good. I will just get out a little bit earlier from this point. Always a little bit earlier from this point. Okay, from the exit that the UFOs tell you. You have to always, verify with something else. In this case, we are verifying with liquidity and with volume where to get out the trade. And the same way the UFOs tell you uh, your stop loss should be on the other UFO side. Okay, so in this case, around here, 130.75, something like this. Yeah, 130.75. And if we look at that on our volume, 130.60, 30.70, 75, it's pretty good. All right, so using either the UFO software information and the volume plus the order flow, see how good this trade is been going. Okay, since we put our entry here on this yellow line, see how good is behaving right now. So this type of trades happens every day. All you have to do is be patient and find the areas where traders are most trapped. Because what happened here actually is that some people sell or sold, and some people bought this market, right? And who is losing right now? The buyers are the ones that are losing. So because the price is moving away from their entry, and when they see an opportunity here, they're still live trade here. People selling, losing their money, and when they see an opportunity, they will sell their entry. Right? When they sell the entry, they will just push the price down again. That's just what happened all the time, every day on the market. Right? I call this like second chances, right? Second chances for the losing guys here, right? You need to try to spot this area and try to spot the losers. Where are the losers here, right? The losers are buying. The buyers were the losers. So they're just waiting for an opportunity to get out. And we found on this candle, which is the candle that actually pushes the price down, we found where is the opportunity for them to get out. Okay, and we found that where there is less volume, the price is more likely to reach that level. And that's what happened here on our yellow line. The first time, you can see, the first time it touches our yellow line right here, let me put a rectangle. You see how it tries several times until it actually break a little bit on the upside, but still it works perfectly. Okay, and the second time we actually penetrated more because there were less resistance. That because it was filled. This hollow point that we had here on this candle was filled by these traders, right? And they took the opportunity to get out, and then the second time again, it go a little bit further because there were no resistance here on this line exactly. But still, these traders that were losing money took the opportunity and got out of their trade, okay, and pushed the market further down. And see where it pushes down the market to the this blue line that we draw from yesterday's volume. And look what happened here. Just when it touches, it was rejected on the upside. So you can see again how, Jaime, that you were asking, how point of control is important and how prices actually react every time it reaches there. And you can see here very clear, very easy how price again reacted from yesterday's volume. Okay, here from yesterday's volume, because there are different kind of traders. There may be long time traders that enter here. Okay, so this their position is being hold here. All right, so they're trying to defend their position, maybe put in more orders, and they push the market a little bit higher here. Okay, and what happens when those orders are filled? The market just will continue. Okay, wherever the direction is will be taken. You can see how now is 150 contracts being added here, and they just took it away. All right, they just took away those 150 contracts, and that's something you can only spot looking at the order flow and the depth of market. And if you saw that exactly just what happened there, they took off of the table 150 contracts. Maybe just something called spoofing, that is to make you think that the price will actually keep moving lower, but then the price just is going to move up. So it tricks people to keep continue selling here. All right, maybe something that the guys that are standing here did just to confuse traders. Okay, because see how they're trying to keep the price above this volume area. You see here how they're trying to keep the price above this area. Okay? You see here a big entry right here in this candle. There was a huge entry to push the market up. Okay, but they find out that there's somebody else, big guy here, selling. Okay, and let me tell you something. Not all the say the big trader, these institutions trader, banks, whatever you want to call it, mutual funds. No, they don't win all the time. They lose too, okay? Because they have to fight another big guys. And this is probably what we are just witnessing here. This big guy facing this big guy here. And one of them is going to lose, okay? And that's what's happening right here in this area. You can see they try to keep the price above this area. They're trying again here. But this guy is pushing the price down. Okay, the tricking retail traders also to get into to join in the market, make them think something else. Okay, that happen all the time, and that's something you need to be aware of when trading. That's why it's important, at least for me, um, to have clear where I'm going to enter, like here, for example, and I'm pretty much clear where I'm going to exit. Okay, because remember what I told you where I was going to exit? Right here, right? In the blue line, this deviation. Because this was my maximum target will be this one, okay, in this case. But I will get off earlier if I saw the um, the liquidity being pushed here on this area. So on my first trade, I will have entered here on the yellow line and got out here, right here when we saw the liquidity happening. Okay, and the second time this liquidity wasn't here, so I will go maximum to the deviation of the big WAP. Okay, so here that will be my ultimate target in this trade if I enter it on the second chances here. Okay, why? Because first there was volume the day before, right? So I know there's resistance, and there's the big WAP deviation, which is actually important because it will be used by these institutional traders, okay, to trade around this area. You can see how it happened here, and it's happening here again, okay? And now if price continue to push on the upside, we don't know that, maybe they will enter again in this volume area and will probably push on the downside again, or this guy just took his profit on this area here and just will let the price slide down. Okay, we don't know that. Why we need to be aware of what's happening and look always at liquidity, the volume, and of course the footprint chart will tell you everything that is happening in the market. Who entered with how much they entered, at which price, um, where is actually the imbalances, okay, where the traders are being aggressive. Everything you can see here with this information. There's more. There's a lot more. All right, a lot more I can show you that you can see and spot using quantitative trading information instead of just technical analysis. And you can combine whatever you're doing if it works and you want to um, perfect the whatever you're doing. You can actually add this information to your trading strategy, and you can find out. For example, you have no, let's say a Fibonacci strategy, and you want to see if that area, the Fibonacci number, is actually worth something. All you have to do is look for liquidity at that point, and if there's a lot of liquidity, that's probably you are right. That's probably that it won't work, at least that time, okay? And if it fails, it won't work because there was no liquidity, there was no interest for that to work, okay? That's why technical analysis sometimes works and sometimes doesn't work. Is because somebody make it works, and when it doesn't, it's because nobody was interested to make that actually happen. Okay, but with quantitative trading, you don't have um, to do that because you have all the information here. You have all the numbers. You have where the liquidity at, where the pending orders are, where is the volume, okay, what's being traded right now, who's being aggressive. All that information is here. Okay, you want um, to learn more, to have more deeper knowledge about this, you can email me and I will guide you through our sessions, what's the next session is going to be, and where you can follow up for more information on this regard, okay? I'll show you again my email. It's right here. It's pedro@predictive.com. Please take note of my email. So you can send me anytime. Here is Pedro at Tradewithufos.com. And remember, you want to use the Trade with UFO application, which is this one in Trading View. Okay, that will show you um, the zones where you can be selling or buying. Okay, in a very easy way. Right, you can use this link here. Is tradewithufo.com/Pedro, and that will just send you to to this to this form right here, right, where you can just type your name, your email, and then click to get the app. I don't know if I think there's a free trial or something. There's another application from Trade with UFO. It's called Auto Climate. I think it's free for Trading View as well, and you can use it to see where's the market directions, uh, and it's very nice to have as an indicator as well. Okay, so remember, and remember this link to tradewithufo.com Nailing FX. I think that there's gonna be the schedule there for the upcoming sessions. Okay, there's not only me doing sessions, but I am who do the order flow. The other session you can find more forex strategies, different strategies using the Trade with UFO, and you follow Nailing FX, you will find that. You will find that even in the FX tree every week. There's a lot of sessions. I think it's every day from Nailing FX. Here Monday, Tuesday, Wednesday, Thursday, and Saturday. Okay, in YouTube as well, so you can find us there and learn a little bit more about trading with UFOs. Okay, but remember always my email, because I get a lot of emails from you guys, and I try to reply to you, as soon as possible. Sometimes I take a little bit longer, but just keep sending me emails. I will always send you some links back, some information, whatever you want. You want the template for the order flow software, I can send it to you too. You want the link for the software and the data feed, because you will need a data feed to get all the market information. Let me show you something. You will see on the order flow software that you won't have anywhere else. Is this the depth of market? Um, it's a very nice tool to have. I use it every day on my entries, because I can see here in real time what's happening. Here on the right side is the pending orders for sellers. This is people that want to sell, but they're waiting for the price to reach their order. And these are the guys who want to buy, okay, and they're waiting for the price to reach that order. And here on the middle, here, let me clear this up. Here you can see the market orders, right? This is real time. What are they taking from these pending orders here? And each time they take all the liquidity available, price will all go up. That just happened. Or will go down in this case, okay? And here in this area, let me clear it up. Here you can see how many contracts they were take off or put in to the market in the pending order side. So you can see where spoofing is happening. For example, here, 148 contracts were took off the market. So this was spoofing, because they didn't want this to be taken. So they took this contract off the market. So you can say, oh, this guy were just trying to fool us, to make us think that the price was going anywhere. All right. And here you can see all the trades that's happening, but you can clear this up and see how many trades are actually taken in any price level here. Okay. So that's useful to see, for example, when they reach the top of a price, for example, let's say that you can see this 3 here, and they start to trading down, and this small number on the top will tell you that in this case, the buyers were just exhausted, or they were just tired of buying and they won't buy anymore. But the best sample here is this one here from the sellers. See that somebody just do one contract on the selling side and they didn't take any more. So that's a good signal for the price to move on the upside. Okay. And here is the market profile, is the volume, as we saw on the chart, on the footprint chart. Where's the volume? This is the point of control here. This 2059. That's the point of control of today. And something you can see with the data fee, because you need data fee to having this, is all the depth. I mean, you can see where's the traders at. You see 272 lots here at this price. Okay, 107 at this price. They're waiting for something happening here, and you can see this only using the order flow. And saying on the buy side, you can see how deep it is, how deep it goes. Okay, you can see where the traders are, right? 120 contracts at this price. There are a lot of guys waiting for something to happen at this price. We don't know what. We don't even know if they're going to reach there. 240 here, you see? That's very, very valuable information that you can only have using these tools, okay? All right, so that's it for today. I hope you enjoy, and I hope to see you next time, next Thursday. I think I'm going to be on FX3 as well. And just keep showing up, guys. And remember, if you have any questions, just email me. I'll be happy to answer you. All right. And well, I think that's it for today. Thank you guys for joining me today, and hope to see you next time. All right. Goodbye.